So I'm going to go over a trade that I took today. It is off of the major demand zone. Now, this is what I saw. I see a lot of strikes to the zone. You have one, two, three, four, five, six. And this is the seventh time that this price has come to the zone. Now, that doesn't mean necessarily that it's not going to actually hold. Um, but I definitely, if I were to take this call, which I am waiting on at this point, um, if I were to take this call, it would be sell immediately when it makes it to when it makes it take profit. Now I did not take the calls that came from here because I didn't like the nature of what I was seeing with the rates and all. Um, some people did, matter of fact, a lot of people did, and I probably should have, but I didn't. So we're moving on. So what I'm looking at is a is it did push up from the zone, yes, but it did not make it anywhere near the supply zone. Well, not anywhere near, but it didn't make it to the supply zone. At least not close enough to actually sound my alarm. As you see, the alarm is completely still intact. So it came down and it tried to push up. My father was here. It tried to push up and got stopped by VWAP in the VWAP area now. VWAP wasn't stopping anything until this point right here. That clued me in. Can't make it to the zone, and VWAP right here stopped the price. As a matter of fact, it looked like it tried to push above VWAP here. So it looked like it stopped it a lot. So VWAP was holding, although in this particular instance, I was planning on taking the trade if it presented a GRC, but that is not what happened. So what ended up happening was what I call a dead cat bounce. I heard it from a trader a long time ago. I don't know if it's the same, but um, basically um, for my criteria with regard to breakouts, it is exactly that where the price comes in for a zone candle, a reversal candle, and what is normally every time I've done it in the past a confirmation candle here, usually green, but then that last candle is what I call a flop. It pushes down past all of these candles and closes below the demand zone. Then if it shows an entry candle, meaning that it's um, forming in my direction um, for 5 to 7 seconds, then I'm entering. So that's why you see me choosing a put, and now we're waiting. So in this situation, I have uh, two take profits. This is a caution. So this is the 1 minute agreement. When I take breakouts, I don't pay attention to 1 minute agreements like that because when these things happen, the strength of this normally pushes past any 1 minute agreement that happens during during the um, during the trade. So this one's a high risk trade. So don't think for a second that this is necessarily MK strategy. This is something that I've adapted from MK strategy whenever whenever I've been trading and seen this happen before. So I want to go ahead and start this back up. So we got 3, 4, 5 seconds, and this candle is completely bullish red, and it stayed that way for the entire 5 seconds. So I'm ready to buy. I think I must have waited 7. I waited 6. So it felt like it glitched out. Um, the price that I was trying to enter on, I think when I first, yeah, Yeah, when I was first ready to buy, say at 6 seconds, the price was at 111. But when I finally did pull the trigger, I got filled at 114. I'm sorry, that's gonna happen to you every now and then. If you're using if you're using the buy market button like I like to do. And so what happens next is the candle just shoots down. It shoots like fire now. And this is what I was hoping for it to do. Although I did not have a prayer, it would go completely through my take profit into my take profit two. Take profit one is the take profit one is the major demand zone from yesterday, and take profit two is a friction area that I noticed in the move upward from yesterday, and I was fully expecting it to continue to go through this one with the next candle. But of course, you got to move to protect some of your property because you know what ends up happening sometimes when you get this big shot down, and sometimes it just shoots right back up. So you don't want I didn't want that to happen without me at least grabbing some profit. So I've already done that. I sold two of them, and now I'm waiting for a possible continuation push. And I was relatively sure if it was going to happen, it was going to happen in the next candle. So I let this one close. So it did exactly what I wanted it to do, but then it pulled back. Right. So I'm like, all right, I'm gonna give it another chance. Let's see what happens. So I'm gonna push down. The answer is no. Okay, well, one more time. Okay, so in this situation, as soon as it pulls green, I'm out. So that's my trade. Now, um this is not something taught in the MK strategy. This is something I developed on my own. And I actually haven't taken one of these since January. I just have not have not had the stomach for it. This is kind of a risky strategy. And in order for it to make sense, you gotta have a 3 to 1 risk to reward ratio. That's my idea anyway. So that's it. That's my truth. Thanks for watching.